Welcome back to Squawk Box. Just a few minutes ago, we brought you comments from RBA Governor Glenn Stevens. He spoke about global and domestic factors and the outlook for the year ahead. And this was interesting. He said he doesn't expect prices of key resources to remain high this year. But do I guess agree? Well, let's bring them in. Jonathan Barratt, Managing Director of Commodity Broking Services. And we've still got Arjuna Mahendran, HSBC Private Bank with us. Jonathan, let's get to you first. What do you think? Do you think commodity prices are going to start to retreat?
Oh, Karen, I think what he's basically resting his assumption, I think, on a bit of a slowdown in Asia. I think that with inflation being a concern in the emerging economies, I think he's basing a lot of his assumptions on that. I sort of do agree with him that there will be a slowdown in Asia, but there are certainly some of those commodities which are in short supply, and I think that will be the balancing item to what he's actually saying. So I sort of agree, but certain commodities will continue to shine.
Where are we going to be supply tight?
Sorry, what's that, Martin?
Yeah, where are we going to be supply tight?
Oh, look, particularly when you look at it, well, there's a couple. There's cotton for one thing. Cotton will remain very tight. Copper is one of the crucial ones, Martin, because at the moment we had forecast a deficit of only about 47,000 metric tonnes, but over the last couple of months that's grown out to about 220,000. So it is a major concern that we do have that supply tightness in that. And when we see that complex start to pick up in Q1, you'll probably see a bit more of a dragged effect through some of the other base metals. So supply tightness in some of them, some of the softs as well. We've still got major concerns, particularly like soybeans, wheat, all those sorts of things. So I can see there's still tightness there in the market. We're not seeing that production, so I'm going to have to balance that with, in fact, the slowdown in Asia, if in fact it happens.
Arjuna, if you're a client and you want to play the growth story, it seems like a no-brainer to go for resources, but are you a bit worried about the situation with commodity prices?
Yes, I mean, I think the headwinds really have to do with this whole inflation problem and the regulatory environment. To me, that seems to be the key. Will central banks in emerging markets like China come in and try and restrict so-called speculative activity by, say, imposing liquidity requirements on traders, etc. Those, to me, seem to be the potential headwinds for commodity prices going forward. I agree that the supply-demand balance looks reasonably positive for the outlook for prices, but on the other hand, remember, there's a big speculative element in this whole price-fixing arena. And to that extent, if regulators come in and then throw in the gauntlet in terms of bringing in these restrictions, that could, I think, dampen some of the investor sentiment towards commodities as an asset class going forward. And the second point, I guess, is that the inflationary concerns in the background mean that bank credit is going to be quite tight, and the outlook is for further tightening in higher interest rates, less credit availability, etc., which may dampen some of the demand for some of these base metals in particular.
Jono, what about gold? What do you see on the horizon for the precious metal? Because we've certainly heard another rise. Every time there is, thin volumes, there's the risk aversion trade back on. The gold just seems to find more energy, more enthusiasm.
Yeah, Karen, look, it is quite interesting with gold. It was actually quite interesting just the last couple of nights when we had that bit of that geopolitical tension, North Korea, South Korea, and we saw actually gold move higher. Look, it is interesting because gold moved higher, and also the US dollar's been moving higher as well. We've just got to, the latest high, I guess, in the last couple of weeks for the US dollar index. So it is purely, as you suggested, just a risk aversion trade. Supply and demand scenarios still hover around, I guess, less supply. We are coming out, and we have got that build coming into Christmas, where the jewellers do start to stock up. So I think the physical demand element of the market has been very prevalent. Whether or not that's going to continue, I don't think so, because that often always comes back a little bit once we get through that Christmas period. Gold, I think, is still in a range. I think it's going to be tough going through that 1400, and it will be on the back of some geopolitical concern and or an inflationary concern that we see perhaps moving on. But at the moment, I see gold pretty much stuck in a range.
Okay, so for now, at least gold go nowhere metal. There you go. John, great to talk to you. Thank you for your time. Jonathan Barratt, and we're back with Arjuna Mahendran in just a bit. Questions for him, email us at squawk@cnbcasia.com.